Today we are going to try to understand what is credit creations. This is one of the major functions of any commercial bank in any country. Now we try to understand what does it mean. Credit creations, we can see here, refer to creation of further deposit through the process of lending operation of bank. For sake of our understanding, we take a hypothetical example so that we can clear about the term credit creation. Suppose Mr. Ram deposited 1 lakh rupees in any bank. Let's bank name is X. RS 1 lakh in X bank. Okay, from this amount, how bank can able to create further credit in economy, we try to understand. If there is a CRR, that is cash reserve ratio, now we have 4%, but sake of understanding we assume that there is a 10%. If there is other requirement, other reserve requirement by central bank, then every bank have to follow the guidelines by the central bank. Suppose it is CRR and any other reserve required by central bank, we assume that is 20%. So Mr. A go for loan in bank, then bank how create the credit in system. What bank can do? They have mandatory to reserve and keep aside 20% amount of 1 lakh, so it will keep 20,000 with himself, or some of the fund will transfer to central bank, then 80,000 it will lend. Again bank not give cash to A, bank give what? Check to the customer A, and customer needed, then he can take a cash through check. In same process B also go for loan. After that again 20%, 8 दूना 16 and 64. Yes, same process continue, and in this process bank pay only 1 lakh rupees, that is EFD. Then assume that the credit interest rate of market is 12%, then bank have to pay in 1 year 12,000. But if it's lend through this route credit creation, it can lend more than 5 lakhs. It means when return of the bank come, it will come the multiplier effect, it can lend it 5 times. It means if lending rate is 15%, then 15 into 5 lakh is equal to 75,000 in a year. You may raise a question how it can possible, because bank know that every customer cannot withdraw the amount in same period of time, so they know the interval or transactions done by customer, and they are doing this thing and earning too much profit. And one of the major problem of liquidity in market is that credit creation. If any bank or any system have more credit creation in economy, then there is shortage of cash and liquidity crisis in the economy, because we see here the primary we have 1 lakh only in the system, but help of 1 lakh we can create 5 lakh, 4 lakh extra. It means that we are doing fake things over here, and in this way there is a problem of liquidity in economy, and bank earn too much return of doing that. Okay, thank you.